$5,000 gold, $50 silver. Will it be happening sooner than later? We're going to talk about all the reasons why in this video and have a lot of examples. This is like the biggest, best live stream that I've ever done, and it's a big honor that you've joined me here in the basement. Please subscribe to the channel. That's free. I want you to be part of this community, part of us who are protecting ourselves against the devaluation of the US dollar and doing it with precious metals. Some people use crypto. Hey, the important thing is that we want to look at what's going on. Look at the big picture. Let's start with this notion of $5,000 gold. And one good way to look at this is just to look at the world in general. Let's look at some crazy numbers out there about where gold is in foreign currencies. We're going to start with this one from Marin Katusa. Right? I always had huge respect for him. He's actually got the gold check mark there on X. But in my opinion, one of the longest running and most respected analysts in the commodity sector. And he says, gold prices in Japan are going vertical. What does this remind you of? And look at this, guys. This is incredible. Look at the gold price in Japan. I mean, heck, if you just go back here and look, oh, when is this? About 2020 time frame through today, it has just been literally a vertical straight up shot. But let's look at some other countries as well. And next, we will go to our friends in Canada. They already have $5,000 gold in Canada. Peter Spina points out that gold prices reached a fresh record high in Canada, and this does continue, breaking through another major milestone on Monday, trading above 5,000 Canadian dollars per troy ounce. Remember, we're going to talk about why this is important, but there we are, right, in Canada. Let's look at a few more countries just for kicks and giggles. This, my friends, is the gold price in Australian dollars, and as you can see there in Australian dollars, let's go down here so we can see the time. There we go. Again, okay, back in that 2020 time frame, we were at $2,000 per ounce, and now, if I move that thing out of the way, we can see that we are well above $5,500 for our friends down under in Canada. I think they like to call us mate. Well, good day, mate. Good job with that. Let's go one more, and we will check out in Brazil, Brazilian reals, I believe it's called. And as we can see there as well, the gold price, wow, really up. Hold on a second here. Let's look at this. From that like 2022, okay, they were about at 8,000 real, and now they're pushing up against 20,000. That's 150% price increase. But why is that important? Because as the US dollar continues to lose its strength against these other currencies, that will push the US dollar gold price closer and closer to $5,000. And heck, with the way that the gold to silver ratio has been lately, hovering between 85 and I don't know if it hit 100, but it wouldn't surprise me. It's real simple math to realize that if we hit $5,000 gold, even if we have a 100-to-1 gold to silver ratio, we're going to have $50 silver. Hey, if the gold to silver ratio gets back to its normal range, let's just say 50 for example purposes, that would give us $100 silver. That would mean that guy right there, the silver bear, who's got an $85 blindfold on, would be unblindfolded. But is there proof, reason? Let's look at what Jesse Colombo brought up about what's going on with the US dollar. And to me, this makes a lot of sense that we could see a rather precipitous decline. Oh, I forgot to show you. Sorry, guys. Darn it. There we go. There is the 10-year gold price in Brazilian reals. Sorry about that. All right, let's go to Jesse, though, because the key here is the dollar breaking down. And what he says is the dollar is on the brink of a major move. This is Jesse Colombo from the Bubble Report Substack. He has over 10,000 subscribers. I've got a lot of respect for this guy. He puts out some great information. But he says here the U.S. dollar is experiencing a rare volatility squeeze, indicating that a major move is near. While the most likely direction is downward, any move will have a big impact on precious metals. And let me show you the chart that he brings up and what he is talking about. This is a chart of the US dollar index. And as you can see on this chart, right, we've kind of been in this period of range bound, kind of below 100, kind of around that 97, 98 range. But if you look at what he shows down here, which is with the Bollinger Bands, that shows a big, big volatility squeeze. He also brings up, and it's important to remember, that currencies typically aren't that volatile. However, most likely, right, and this is based on what's been going on with the US dollar lately, the trend has been down, 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 that most likely or very likely the trend will continue to go down. And that's in the DXY index, which we're going to take a look at right now, because guys, this, we've looked at this chart many, many times. But today, what we're seeing in the DXY index is that we are sitting still below. Oh, hold on. Let's get that up. Where is it? There it is. Still below 100. Get rid of that. Can I get rid of that? Goodbye. Okay, there we go. This is a little better for your viewing pleasure. But wrong one. Hold on here. We're going to get out to an all-time chart. Okay, what Jesse's talking about and what I'm anticipating, this is just my opinion, is that when we look at this long-term chart, and I'm going to draw a red line at 100 all the way back to probably 1985, you can see that it's very, very plausible that the dollar index could get down into this level, which is 75. That will be rocket fuel for the price of the metal. So as that volatility squeeze rectifies itself, we're going to be keeping a close eye on that. Let's talk about the COMEX and the LBMA. Look, there are people, the COMEX, right, the electronic gold and silver, quote unquote, exchange here in the United States, the LBMA, the London Bullion Market Association, those fine chaps over in London, England, who've been, let's say, influencing the price of metals for decades and decades and decades. There are people who have spent their entire career pointing out that how corrupt they are. There's been lawsuits. There are people that have been put in jail for manipulating the prices on these exchanges. I dig into it deeply. I'll give you the Cliff Notes version of what's going on at the COMEX and the LBMA. There are some major imbalances, some major red flags, if you will, about what are going on at those exchanges. Silver lease rates are out of whack. That's like the amount of money that people have to pay and the interest they have to pay to lease silver. On top of that, the EFP, do you know what the EFP is? That's the exchange for physical. That's the difference between the futures price in the United States on the COMEX and the physical price at the LBMA. That's out of whack as well. Some people, and even Kitco had a headline article, are saying that this is as, let's say, precarious of a situation as the COMEX and the LBMA have found themselves in a very long time. And that possibly that these imbalances could lead to a silver squeeze. But the important thing for us to remember is that where we are in the silver price right now at $40, this has not been a short-term blast-off spike in the price. This has been a rather gradual build, go up, go down a little bit, go up a little more, go down a little bit, go up a little more, go down. Not like 1980, not like 2011. No. This time's different. This time it's been built on solid consolidation and solid upward moves. I don't hear any other analysts really harping on that, but I think that's one of the most powerful things because a price that's built on kind of a long-term, more gradual, solid base can provide a base for even further long-term solid. We don't, guess what? Okay, you may hate me. You may turn off the live stream right now. I hope you don't. I'm glad you're here. But I kind of hope we don't have a silver squeeze. I kind of hope that we just can. I'm happy. Are you happy? Right? If the silver price goes up $10 an ounce from where it is right now in the next 6 months, and maybe another $10 an ounce in the following 12 months, and then maybe another $10 an ounce from there, Usually, the reason I say that is because anything that spikes, like you get during a squeeze, almost always, pretty much always comes back down. It's like a law of nature. You know, if you throw something up, a bottle rocket goes up, it comes right back down. Nonetheless, these imbalances can also help contribute to continued long-term growth within both are on both the COMEX and the LBMA. We did Jesse already. Okay, now let's talk about Goldman Sachs talking about precious metals. That Goldman Sachs, there's a big article out that you got to be like a wealthy subscriber to get to read, but we can get the headlines, and it's interesting to think about where this headline is coming from. And here we go. Okay. One of Goldman's big trade recommendations for the rest of the year is gold miners. And not only is that Goldman Sachs that's saying that, but think about it, guys. We're going to circle this one in yellow. This is coming to us. We're circling in red from CNBC. CNBC, the mainstream media. But Goldman Sachs is talking about, and we've all, three big critical things about this. Goldman Sachs is telling people gold miners are the place to be. It's one of their top 3 ideas. I think it says for the rest of the year. Okay. That will bring more attention into the overall precious metals ecosystem. Physical gold, physical silver, miners, royalty companies, you name it, developers, explorers, but it will bring more attention when Goldman Sachs, we may not like them, but I want you to think about something. The first 4 letters of Goldman Sachs' name is gold, our gold. Anyway, boy, my English skills are really falling apart today on this live stream. Thanks for suffering through this with me. Don't forget to subscribe, but that's a good thing for the overall metals ecosystem. We also know that Goldman Sachs last week put out a piece of research saying that they could see the potential for gold reaching in US dollar terms. Oh, wait a minute. What was that we talked about earlier? $5,000 per ounce. And again, what's good for gold is good for silver. But the real important takeaway we want from this also is that that's CNBC that's putting out that article. A positive article, a positive headline about gold and silver. Can you believe it? Is this really happening? Huh? Are we here? Is today really, right? The 10th of September, 2025? Are we really in a bull market for precious metals, gold, silver, and precious metal mining stocks? Is CNBC running headline articles about gold and about Goldman Sachs? Guys, this is big. This is happening, and we are on the brink of the perfect storm. Look, I don't give financial advice. I'm not a financial advisor, but I believe the gold mining stocks and the silver mining stocks are on the verge. Okay, I do want to mention and say thank you to channel sponsor, wrong finger. There it is. First Mining Gold. Okay, that's a stock I owned long before they sponsored my channel. Again, I'm not giving financial advice. Do your own research. I love First Mining Gold because they have massive amounts of gold in the ground in Canada. They actually have a lot of silver too, but that's a different story. They're primarily a gold development stage company. The gold's been drilled, it's been determined, it's in the ground. 2 massive multi-million ounce projects, Springpole in Ontario and Du Parquet in Quebec. This is big gold in the ground in Canada. And the big active mining companies, guess what? Here's a little secret. Over the last 20 years, 15 years, have not been investing in their pipeline, have not been developing and exploring for gold. And every time a big gold mining company mines an ounce of gold, right, it's gone. They have to replace that with other resources in the ground. I believe companies like First Mining Gold could become very attractive to these big mining companies. You can learn more about them at firstmininggold.com. You can even reach out to their Director of Investor Relations, the one and only Mr. Paul Morris, Paul at firstmininggold.com. And I guarantee you, 29 more likes for 100. Over. Thank you, Susie. I guarantee you he will get back to you. Let's get to 100 likes. We got 350 people on a snap. The gold and silver community, you are part of something special that is happening right now. Not just the world's biggest, best live stream about gold and silver. No, just the overall gold and silver market. The fact that you are here tells me you are ahead of the curve. Yes, you have a little bit higher level of intellectual horsepower than the average bear, right? You know what's happening out there. Trust me, we're going to be doing live streams where we have 3,000, 4,000 people on. And that's when we might start thinking about booking a little bit of our profits. But guys, this is a big deal. What is happening right now? And let's talk about what can happen within these. Here we go. Boom. This is a crazy chart. Okay. This is the entire 1970 to 1980 bull market for gold miners. Again, when the gold miners catch fire, the silver miners catch fire. The overall silver and gold ecosystem does well. Okay. The blue line at the bottom is the S&P 500. And again, this starts back here around 1970 and ends in 1980. As you can see, that blue line is basically flat. The overall stock market did not. Hold on a second. Oh man, I lost. Hold on, guys. Are you still there? Sorry about that. Looks like we lost our connection. Hold on here. Let me get this back up. And I know. Thank you, Susie. And what is happening here? Here we go. Let me get back here. All right, guys. Let me get this chart up because this is definitely. There we are. And make sure we got you up. Okay. I don't know what happened there. Had some technical difficulties. I apologize. Anyway, this goes. I already started drawing on there from the 1970 all the way through 1980. And the blue section represents the S&P 500. Again, 1970 through 1980. The blue line is the general stock market, just basically flat. But look at that yellow line. It started here at 100 and went all the way up here at one point above 1,000. Okay, that are the gold miners. It says right here from December of 69 through October of 1980, the Barron's Gold Mining Index was up 1,247%. That's 12 times, 12x, not 12%, not 120%, right? But no, 12 times. That meant for every dollar that was invested in gold mining stocks back then, on average, $12 was returned during that period. And that came from Crescott Capital, another big analyst that I love to follow, Tavi Costa. Okay. It gets more interesting from here within the gold and silver sector when we get this massive news that came out. Tether. Okay. Do you know who Tether is? Tether is the world's biggest stable coin issuer. Okay. The world's biggest. Do you know what a stable coin is? A stable coin is a cryptocurrency, but each token represents something real, something that can be counted, like the USDC, or in Tether's case, the USDT stablecoin, the US dollar Tether stablecoin. Each one of those coins represents $1. They also have what's called XAUT, where each one of the coins represents an ounce of gold. And Tether has made an announcement that it's expanding its investments into the gold and gold mining sector. Very interesting, even into the royalty sector as well. So we've got and they are a big company. Whether you like or hate crypto, that's not anything we're going to debate here. But what we know is that they are looking to invest a ton of money. And then we got news out of El Salvador. Also, stablecoin issuer Tether held talks on investing in gold miners and royalty firms after already acquiring they own $8.7 billion worth of gold. Okay. El Salvador bought nearly 14,000 ounces of gold for $50 million. Its first central bank purchase since 1990. The interesting thing that the CEO of Tether, Paulo Ordoño, previously described gold as natural Bitcoin and suggested in a separate interview that if a global reset were to occur, it would happen in gold. Okay, so remember this, guys. This company, it's a crypto company, Tether, but they already own billions of dollars worth of physical gold because each of those gold stablecoin tokens that they issue is absolutely backed by 1 ounce of real gold. It's held in a Swiss vault, right? In these real world asset stable coins that are backed by real assets are gaining more and more traction. Okay, again, not here to debate crypto. I like crypto. I love gold and silver. Everybody's different. That's great, but that's a fact that the world's biggest stablecoin issuer is moving into gold, and that's an exciting thing. We had the worst job numbers in the history of the world. Do I need to show you that? You don't need to. 911,000 jobs, almost 1 million jobs were restated from the March 2023 to March 2024 timeframe. It's incredible. We are headed, I don't want to be the town crier, for trouble. And I want to point this out because this is very interesting. A lot of people are worried about what's going to happen to the gold price, the silver price, the mining stock price, if the stock market has a major correction. Again, I'm not a financial advisor, but I'm going to share with you some interesting points, right? Some reasons why I think we don't have to be so worried right now about what happens with the metals if indeed we do go into a challenging economic period. Before I do that, I do want to say thank you to channel sponsor First Mint. If you want to get your hands on some silver, if you think it's a smart thing to do, I think it's smart for you to check out First Mint. That is their Las Vegas round. It is absolutely beautiful. They've got rounds that are unique to them. They also have bars. There's a 5-ounce silver bar upstairs. Susie, that's one of her favorites. First Mint is unique. They are owned by First Majestic Silver. That's Keith Neumeyer's massive silver mining company. So First Majestic Silver mines the silver in Mexico, ships it to the United States, Las Vegas, Nevada, where First Mint has their facilities. In the United States, it is minted into world-class silver bullion products, and then it goes straight to you. Okay, so it's from the mine to the mint to you, and their products are absolutely beautiful. They have great prices, great selection, free shipping on orders over $199, and there's a discount code, VIPRB. Don't forget to use that. Firstmint.com. I'll show you their website here real quickly so you know where to go. And here we go. There's that Las Vegas round at the First Mint website, firstmint.com. You're the snake. All these products are unique to them. Make sure you check them out. But the question I have for you is, are you worried? Right? I'm getting all these emails, all these questions from viewers. What's going to happen if the stock market goes down? What's going to happen? Guys, think about this. I got notes. I got to read from the notes. There's so much. Okay. We're in a tech bubble. Let's just look at the tech field right now. By any measure, we are in a bubble in the tech stocks. Think about if the tech stocks, for instance, start to go down. Where are people going to go with all that money? Are they going to buy real estate? Right? Wherever you live, right? Residential real estate is through the roof, overpriced. Are they going to go into commercial real estate? That sector's hurting like nothing before. Are they going to go into bonds? Who in their right mind is going to loan money out? Who's going to buy bonds? Enough. Okay. We're going to get in a situation where likely the most attractive game in town will be precious metals. Okay. That's happened in the past. That happened during that 1970 to 1980 period that I showed you earlier. It also happened, think about this, from 2001 to 2011, after the official tech bubble burst, the 2000s tech bubble with pets.com and all that, kind of like the AI stuff that we have going on right now. People during that period went to gold and silver. From 2001 to 2011, the silver price, for instance, went from under $5 per ounce to over $50 per ounce. So, we're in this situation right now where things are starting to look very dicey. Unemployment is going to go shooting up. Okay. The reality is the job market's in big trouble. We also got some data They came out earlier in the week. I don't know if you saw this, but there's a record number of houses for sale right now in the southern United States. So be ready, but don't be too scared. The reality is that that when this next crisis hits us, okay, gold and silver are going to look like a very attractive place for people to protect their wealth. And people will get scared, okay? And when you look at the market caps, I mean, of Apple or Amazon or Nvidia or any of these, even just a small portion of that market cap coming into the gold and silver sector will have unbelievable impact, right? Because it is still so small, in particular with the mining sector. So keep it up, guys. Okay, thank you for joining me down here in the basement. Please don't forget. Oh, I got to ring the gong. Don't forget to subscribe. Let's ring the golden gong. It's a tradition. I really appreciate you being here. I really appreciate you being part of this journey. It's a tradition that when we get to 100 thumbs up, we ring the gong 3 times. Here we go. Listen to it resonate. All right, silver and gold investors, we are in a good period of time. We've suffered through over the years. Think about this. Were you here with me 2 years ago when we were talking about $20 silver? Were we here 2 years ago? I remember. Do you remember 2 years ago? Remember talking about when silver would go into the 20s and we would say, we're never going to see a silver price again that starts with the number 1, meaning something in the teens, and still until that silver price starting with a 1 is in the hundreds. Okay. Now look where we are. We are above. Let's go take a look. Let's go take a look at where we are. There's First Mint with the metals prices right now. Make sure I got the screen shared, which I do. Okay. We are in the futures market. Silver, $41.66. Gold, $36.86. Let me pull up silver for you again, because I didn't give this to you visually. There's a real important reason why we want to look at this chart on a longer term basis. Okay. That's a 1 year. That's a 1 year chart of silver. We can look at it here. This is fine. Okay, guys, look, 1 year ago right now, we were at this point, which is $30 silver. Today in the futures market, we are over $41. Do you see this? Okay, that's what you see on that chart. Let me tell you what you don't see on this chart, which is even more important. What you don't see is this, the price shooting up and then coming back down, okay? The most, I think, exaggerated moves that we see on this chart, probably in this section right here back in April, when the price dropped from $35 back to $30, but then immediately started what again is a rather gradual increase. This is not like, oh, we shot up. You know, we were down here. It's let me erase everything. It's not like, you know, a month ago we were at $30 and today we're at 40, which would be much more likely to result in a drop right back down. No, it has been a slow, gradual, steady increase. And, you know, look, the mining stocks are just the same. We've seen big increases, but nothing absolutely crazy. Let me tell you, let me let you in on a little secret about the gold and silver mining stocks. Their price to earnings ratios, even right now, based on the last quarterly data, are well below the overall average for the major indexes, things like the S&P 500, the NASDAQ, that type of thing. But the kicker with the gold, silver mining stocks is that not only is their price to earnings ratio lower, but since their earnings are coming up more and more, it makes that disparity, that gap between where they are and where the markets are, even more exaggerated. Man, it's going to be fun. I really appreciate you being here. Again, please don't forget, subscribe to the channel. But no matter what, okay, have a great day. Be good to yourself. And I'll look forward to seeing you, yes, you, next time. Thank you.